Let's check in on the markets for you now. Trading in Europe and in Asia mostly down this Friday after a week dominated by big swings for oil. Joining us, as always, on a Friday is Jameel Ahmad. He is a chief market analyst at GTC. He's with us live now from Dubai. Jameel, as always, good to talk to you. First of all, what is driving then the market at the moment today?
Nadia, we have many different themes driving financial market sentiment. And I think that already in 2026, it feels like we're a few months into the year because of how busy we've been and how short of a time ago or long of a time ago, it feels like we were just wrapping up for festive season. Generally speaking, we're still keeping a very close eye on gold, silver, a little bit on cryptocurrencies, but also on major foreign exchange like the US dollar, which seems to be staging somewhat of a comeback. Again, this is very much led by sentiment and I would say somewhat animal spirits because of some of the uncertain events that are taking place across the world, which suggests to us that volatility is here to stay for longer. And of course, we had a very busy 2025 with so many different themes. Looks like that is something that we're going to see continue into 2026, even though there is some right consensus to say that economic data and some of the fundamentals should be very closely watched because you have major institutions such as the OECD, the World Bank, and so forth being a little bit cautious that global economic growth will actually be slower in 2026 than 2025. But overall, if you have uncertainty in the world, we're going to be watching that more than some of those core economics.
And look, just a couple of weeks ago, everyone was talking about the price of oil that after the United States seized Nicolas Maduro from Venezuela. Prices since then have settled. Explain to us why that is.
Essentially, Venezuela is very oil rich in terms of its potential reserves of the commodity, where you're looking at somewhere between 15 to 20% of reserves, which would make it number one in the world. But it is poor in terms of actually getting that commodity out to the market because Venezuela only accounts for as much as 1% of world oil consumption. There might be a time where Venezuela reaches its potential, but it's been completely under-resourced. It's been completely under-invested in terms of infrastructure now for a number of decades. And it's going to take a lot of time for that potential to actually reach the atmosphere, which might then impact price sentiment. And then, of course, I would say not so invisible elephant in the room is that we very much know that the US administration, led by President Trump, they want oil prices to stay lower for longer, which suggests to us that even if Venezuela does at some point reach its potential in terms of reaching the market, that it's going to mean more of an oversupply, which essentially in those terms of financial market mechanisms means that actually it's going to pressure prices.
And Jameel, just finally, how much could all of this change due to the situation that we've been watching closely in Iran?
It could change in an instant. This is a region that's very volatile when it comes to oil-related news. Of course, it's also somewhat sensitive because we never know what might happen next. Of course, all of us have our fingers crossed that we're not going to have an escalation. But considering what the region is known to be when it comes to oil and the major exporters around this region and how sensitive those economies are to oil-related news, should we unfortunately have a turn for the worse, and again, we hope that this is not going to be the case, then of course that means that anything we've just said regarding price sentiment and price drivers, that could change very fast if we have a change in the supply in the market.